Hello again.
Hi.
Great.
Hello again.
So I think, Tim, at the first fireside chat, you were asking, how should investors think around impact and what should they invest in? And I think venture capital is such an important part of the impact story because it's really thinking about how we can do things differently and how we can be more bold in terms of how we think around investments and innovation. And I think something I reflected on just listening to the previous presentations and panelists, it's really like, it feels like we're a big orchestra and maybe we have the regulators being the conductors, setting the pace, and then we have the academia and the scientists and the innovators creating the instruments for us to play. And I think the important role maybe for investors is how to play those instruments. So looking at it as a system, there's no silver bullet, there's no one solution, but we really need to work collaboratively. We need to build the bridges. And so I think just to set the stage here for the investors in the room, just thinking about venture capital and how one can find leverage points in the system, what advice would you give to them from your point of view?
Go for it, Hanno.
I go first. The question was already somehow in a panel, what I would really recommend for investors when they talk about impact investing. And Costas, you were also answering part of that already, I think. I would never go probably if I'm not so familiar with impact and sustainability and, it's a kind of measurement and you don't know how do they measure impact. I would first take a look at really, do they make a difference? And do they have really an impact and do they show it? And do they have somebody who is saying, yes, they have an impact? And normally somebody like this. And secondly, we heard it that out of 100 startups, 3 make it. And they say, so you can invest into 100 and 3 will make it. So I can say, okay, go for this 100. But if you're going to invest, let's say 100,000 euros, that means you're putting 1,000 for each. That's not very intelligent. My advice would be, look at those who have at minimum established business model that is working and where the markets are already functioning. And then if you know, okay, they have the right business model and it's already there, go for those who are upscaling modus so that you can make really a difference and know that your money that you invest do contribute to impact and secondly, have a high possibility of return. That would be the 2 basic things I would look at first.
I agree, first of all.
Great.
And I guess, we agree on many things, even though our presentation sat sort of on quite far ends of the spectrum, I guess, of what circularity and investing in this space could be about. Maybe, I guess it's a different way of saying the same thing, is when you're investing in this space, look for businesses that have an impact, but do it in the simplest way possible. And not try to change too many things, because again, most of the industries we look at, Sopeya is different to your point as in you're trying to build a new ritual in an audience that has no such ritual around cleaning hands, but the majority of investment opportunities you'll come up against are basically an improvement on what already exists. So if you're looking at let's say a circular toilet paper, as an example, look for one that just has a better material, not one that also changes the shape or also tells you it needs to be bought in a different way and it change and change and change. Keep it simple. What's the sort of the key problem being solved and what's the simplest way of getting there? I think then you can reach a much higher success rate than 3 in 100.
Yeah, and probably to add one topic, we talked about somehow risk management. I'm very easy on that topic. Why? Actually, if you look into venture capital investment, I would always look only at the 3-4 real problems that can occur. With Sopeya, we have been making a risk assessment. We came out with about 70 risks. Yeah? Mm-hmm. Because we were looking at the large global view, what can happen. But at the end, it reduces to 3, 4, 5 real risks that can happen to Sopeya. And so what we have to do is to really think of what is the probability of this risk and to what amount does it really cause and happen and affect Sopeya. Mm-hmm. And this is also an important role for investors look at the real risks and do not think about the global risk already around and what can happen then and then. I see too many customers thinking of that instead of asking the people who are familiar with that and those who really learned these are the 3-4 topics you have to look at. And this makes a huge difference, of course.
Can I make an immediate build on that
Yeah,
before
of course.
torpedoing your whole sort of questionnaire? But there is I love what you're saying there, but because you can brainstorm for problems all day and you'll find 100, you'll find 1,000. I guess it's maybe also a telltale sign of a business who know what they're doing is they found the problem in the market that they're going to solve. And the product they're working on is just the first solution to this. Because they have already seen that problem, here's the first solution I have, I'm then going to build a second solution and a third, and before you know it, you have a business that is made up of a portfolio of products rather than just this one thing. And this is also, I guess, how investing in the physical space is very different from, you could say, from a software space where it's all about, I'm going to create the app, I'm going to create the software solution. No, you're going to create probably a range of things. If I think of Sopeya, washing hands is step one. We still have the rest of the body to deal with, also without water. What do we do then? So you can already see how the problem identified will roll into different kinds of solutions that give you the runway that you need to create a proper business.
Costas, perfect for answering all.
Did I just give away your R&D?
No, sorry, Hiba, that we are not involving. But
You can have a dialogue.
no. But the interesting thing is, like you said, I mean, hand cleaning is the beginning.
Yes.
The founder already said, and we had a first test in the office in Frankfurt to clean the face because the skin of the face is different to what it is in the hands and the feet. And it was interesting, and it was a different kind of Sopeya, of course. Yeah, the product is a little bit different, but it works, and it cleans your face. And then the help organizations came and said, they just said, hand cleaning is beautiful, but if you look into water consumption for cleaning the body, and even about the people who are living in really bad circumstances, and they do not have any hygiene on the body, they ask us, are you able to provide a solution for the body? And if you know Peter Schneider, who founded the idea and invented the idea, said, I'm already working on it. Mm-hmm. So, of course, we will expand and so on. But you also have to look from a venture capital perspective. I mean, once we started with Sopeya, you first have to come to the market to earn some money, to expand and to invest into R&D, and then to take it further on. So it's a step-by-step approach, but you're right, problem by problem, and then you are getting to what you really want to think of, a real hygienic solution for the whole body. Mm-hmm.
I think both of you touched on some very interesting points because it feels like when most investors think about impact or sustainability, it's this dance between returns or impact. But it sounds like both of you really have the experience of showcasing that you can do both. And I guess the other point that I was reflecting on is to your point on risk, that venture often is very associated with higher risk. And if we look at, for instance, the digital space, we can see the scale up and the growth exponentially, within a very short period of time. How do you see that within the spheres where you operate and the companies that you address in sort of the physical world?
If I can give a really simple answer on that, and then you can do like the more sophisticated one. An example of assessing risk in I guess, startups and early stage businesses is very often by judging the quality of the team. Is this a good team? Are they smart people? And if they're not, it must be awful. I'm thinking, and again, I'm not from this industry originally, I'm thinking it's much easier to replace a bad manager than rethink a bad idea. So if you have like a really good team, but the product they're working on is just not good, that's a much more hopeless case from my point of view than the other way around, where the idea is fantastic. It's just the wrong team sitting around it. That you can shuffle with and play with. So I think the perception of risk is... it depends very much of sort of the background you have. And if anything, if you want to judge it properly, get some people with completely different sort of angles into it on the table. Not just a financial risk, not just an R&D risk, but get some of the other folks to have a look as well.
Yeah, and my view is actually it's difficult for investors to really make a decision on where do I put my money. I mean, imagine we are all sitting here, we have some money saved, and then we say, I want to invest. And I think that the idea of sustainability is great, but now it's my own money that I earned, and so, okay, how much risk do I take? And so I would always go for the established business models that have already proven a track record and that you're scaling up, because those people are great inventors, and they have the right approach, probably bad managers or whatever, you have to replace or have to build a team around it, that's fine. But at the end, if that is a proven market already and you see that first results are coming in, then it's really the upscaling game, and there you can invest more easily. Secondly, what I would recommend is transparency. Yeah, first of all, of course, I already said in my first answer, sustainability has to be measured, and you need to understand, do they do it properly? Second thing is, I would also look into what is the management team providing as financial information. Some of these sustainable ventures do not give the transparency, but I think it's very important to have transparency on the financial of that company. You know, some of them do provide a business case, that's fine, but they did not ever earn any money, and they provide a business case that is showing you're coming to money probably in 5 to 8 years. And I would say, stay away, because it's your money that you've earned. You want to see a return at a certain point, and then it comes to what I always recommend. Go into a portfolio so that you have not one single exposure, right? Because portfolio is better, but then portfolio of upscaling companies, much transparency, and therefore I also am very happy that I'm very closely working together with my team, together with the German sustainability, because they already have a portfolio, as Ole has been showing. And interestingly, sustainable impact investments makes a huge difference with German sustainability, because they have offered a model that I didn't see in the market overall, and the idea is great. Ole and his team has provided a venture capital investment that is not equity, it's a debt investment. So you're providing your savings money into debt, and the German sustainability provides a security by just having a very good balance sheet, and that is transparent. So if you are investing via debt, it's even the best way you can do. So from my perspective, if you go this way, it's an intelligent investment.
So being more flexible in how you invest.
Absolutely.
Yeah. And I guess also to summarize, it's about, if you're not profitable, then there's probably not sufficient demand for the product. It's a nice idea or a nice to have, but you haven't fully.
Yeah, I would like to take a deep dive on Sopeya, because I think you need to have an example. If you look into Sopeya, we were also sitting around the table and asking, okay, we have a powder that is cleaning hands properly. We have tested it. We know that it has no competitor who's really can fight it right now. So what is the demand? And then, of course, you are ending up with two things as a business model, as I explained a little bit in the presentation. A is people have enough water to clean their hands, but you have to go against their behavior in cleaning routines, which, Costas, you said, don't do it. That's correct. From my perspective, this is correct. Also, there is a huge demand, probably, but those who do not have a routine, that is something where you see the demand. So we were then looking into, and I remember the first steps we took with Sopeya. We were sitting around the table and asking ourselves, Tim was in the room, Peter was there, and Boris and some others. We were discussing how big is the problem. And then, there is data around. And we saw that the WHO, the organization, was providing that 600 million people do not have access to hand hygiene. It's 600 million. And you know what? Peter, who is the founder, said, we want to work about it, because that is something that, therefore, I invented it. So the demand we see is already there. So everybody who wants to invest into Sopeya, let's say, for a second, he knows something. 600 million do not have hand hygiene. They have a very good product for this. It's making powder available, and so you see that the demand is already there from the market. The only question is, how do they make a business model out of this? Yeah? That's where you have to look into too. But I would always, when I would invest my money, I would ask, how big is the market potential and what kind of problem does it really solve? And here it's very obvious. So I would ask always, if you go for sustainable investments, look at the market potential, look into what you can really do and how you invest into those potentials that are really tapped and are lying on the table.
I think it's such an interesting point, because when you look at impact in itself is quite niche, and then if you look at climate itself, it's another niche. So just looking at your engagements and your portfolio, how do you really discern that market potential? So how do you see the ripple effects of the small idea? So I think, your company is a great example of that. You started small, and then all of a sudden you realize this significant potential of it. But maybe you can walk us through some examples of
getting a sense of whether or not it's going to have traction or not, I
Yes.
guess. Well, there are a couple of things which you already referred to, which is at least not going after let's say, the technology looking for a problem to solve. And there are plenty of investment opportunities in that area where they use language like product market fit. So they're literally developing a tech and they don't know who's going to use it. I mean, I would personally stay away from stuff like that. So to your point, there is always a problem out there that needs to be solved. And if you see the young business working on a clear issue, that's one. I think the benefit in the impact space or anything related to sustainability is you also have the regulatory pressure now coming in across Europe, definitely, but it's going much wider. And that kind of gives you a hint of where the problems are really going to be. So an obvious one we're focusing at Unaterra has everything to do with single-use packaging and packaging in general, where well, even the biggest businesses out there with the biggest volumes you can imagine have to solve that problem, because otherwise they're going to be fined heavily. And whether it's in 2 years' time, 5 years' time, or maybe even a little longer, they will have to deal with it. So then you can start scouting really for what are the younger businesses, the smaller businesses who've clocked that and are working on a solution that's going to get the big ones out of trouble, because that's again where the scale comes from. Tetra Pak is not going to be replaced by a new company that is only very small right now. They are probably going to buy for a lot of money a technology they simply cannot develop themselves, because they're not set up to develop something that will destroy the current business. It will replace and evolve by something you can all invest in a certain sense, because it's still a small business now. I'm not sure if I'm really answering your question, but it's more sort of where's the sweet spot, you could say, of some of the motions.
From my perspective, probably German sustainability has taken a little bit a different approach, especially focusing on technology-driven companies with regard to sustainable effects. And what is smart is about that the technology is a patent-covered solution, and you cannot copy it so fast. This is also kind of, risk that you would be facing, but the technology that they're using, like for EcoMotion, which we will hear about, Sopeya, and other things like Susmata, is always a patent solution. So patent cover is there, and the technology is solving a real problem. And by that you have a quite competitive advantage. From my perspective, that is also something that I would take into account, because there is we saw a lot of initiatives today and a lot of companies already in the place, and it's the 6th or 7th time we are on a conference and seeing a lot of ideas around. How do you distinguish as a venture capital provider to say what do I go for? So I would also discuss, there are different measures like the ecosystem or the circular system, technology-driven. It depends a little bit on what you're focusing on, but for the investor, I think it's also extremely important to know that the market position you are taking at the beginning cannot be copied easily. Yeah, so that you keep away, because let's look at Sopeya. If it wouldn't be patented, I'm pretty much sure there are others around that would copy it just instantly. And we already know that the patent has been published, and companies already are interested in knowing about Sopeya and want to, say, okay, what can we do with it? Because they have the power, the thing that their businesses, their traditional business, has to move, because they are not contributing to sustainability. So This is quite, and you are right, Tetra Pak will not go away, so they will buy the solution. I'm pretty much sure at a certain point of time, the company for Sopeya is not the right one because it has to grow to another level. You need probably other funding resources, and then it could be also sold. That is completely right. But then it's in the world.
Yeah.
Because then it is huge enough. If we serve 30 million, 100 million people with clean hands in the third world, and this will going to happen, then you cannot discuss anymore that it is not worth, because nobody can kill it anymore. And that is also something that we have to take care of.
Yeah. I think it's such a nice or interesting balance, because on one hand you want to protect your IP, but as we heard with the medical AI example, collaboration of learnings and of data is also important. So I guess it's that tipping point of, where have we secured our position versus where can we get smarter as a collective by sharing the learnings. But it really depends on the sector in which you operate.
Yeah, but honestly, the cooperation is key, even for Sopeya. I mean, we are not doing it on our own. Yeah, Peter has invented it. We are discussing it in a small team how to develop it, but we have already a production plant with the production know-how. We have a cosmetics producer who is taking care of that and know about the recipe and know about that things that are needed for sourcing our ingredients. Yeah, we are partnering with help organizations. Why? Because we do not know all about Sopeya and how we have to handle it. But we are learning in a system. We are partnering. We are open to do that. But what we are not doing is to go to Procter & Gamble and say we have an idea, or to Henkel or so, because we are not quite obviously sure that they will take the idea forward instead of probably eroding it. And that is not the right way with that topic. And it's, and still with Sopeya, we have to go a journey. Because if you look into what is possible, we are producing in Germany right now, right? Because we have started. But the ingredients we can source from all over the world. So we can change the supply chain. We can work with what is growing in the earth around the globe. We already saw that. We can go for regional production because we do not have to produce it in Germany only. We can also produce it anywhere else. Of course, we're not at that step, but we know about it. So, we partnering there is also important. If you look to the help organizations, they tell us probably we would buy much, much more if you could produce in Africa. Yeah, because then when they have local sourcing, they say we go for 100 ton only when you talk about plant, yeah, which we are partnering with. So, partnering is essential. Don't think that you are the only one who is intelligent, you fail. Listen to the people and then put together the system correctly. And this is making a huge difference, and it's scaling rapidly. And that's what we also discovered with Sopeya right now.
Yeah. So I wanted to ask a final question and then open up for the audience to ask questions too. But you mentioned you have an extraordinary pipeline. And just looking at venture capital, it's typically had this more daring role, sort of paving the way for more sort of general capital to come behind it. What do you think, as a piece of advice in terms of why is the timing now for investors to get involved in impact investing or sustainable investing?
I would say the timing has been around for quite a while already, so it's still a good moment to step in. In my view, and this is very much informed by sort of the type of businesses we look at, is the buyers of the companies that we're investing in now, because almost every single one we look at is a clear sort of M&A target 5 years from now, 8 years from now, is the big organizations that are going to have to absorb all these fantastic companies are really getting into that, let's say, mindset. And I guess it's two reasons, I think, driving that beyond, let's say, regulation and things that we talked about before, and this sort of sense of we better do something a little cleaner, a little better for the planet. I think there is the sort of middle term sort of decoupling of the global supply chains happening. Whether we like it or not, the world is drifting further apart right now rather than coming together. So these really long supply chains that usually started in China, that's not going to get better, it's going to get worse. So you could say supply chain resilience and doing things more local, using less energy, reusing a lot of things, therefore is a smart thing to do. I think on the even longer term, again, what the large companies of the world are going to be facing is it's going to be really hard to attract talent if they're still doing their business ugly. Forget about all the regulation, etc. I mean, who's going to want to work for Shell 10 years from now? Who's even going to want to work for Siemens or for a chocolate company who do not have their act in order? The problem they have is they are structured in such a way they cannot solve this themselves almost. That's why they're going to be buying the businesses that will become part of their business going forward. And that's the ones you could say that we're really looking for when we invest. So it's a long answer to your question, but that's what I believe.
Well, my view is not different. I think that sustainability is not a trend. It's a mega trend. And it comes from, actually from the 70s already, when the Club of Rome discovered that there are borders of growth, just because it comes to the resources of our earth. And what I think, I mean, I've been working for 25 years in the financial services industry, and I'm honest, the first 20 years I did not pay attention to sustainability because it was not asked. Of course, we ask ourselves, what kind of function do we have in our society? And this was also topic in board meetings and so on. But to really drive sustainability and to know what your bank is doing or your financial investor is doing or your financial institutions are doing, it was no discussion around really. Although the sustainability was already picking up. But the real pace is coming in right now. I feel that probably from now and onwards for the next 10, 15, 20 years, this mega trend will last and will show that we can turn around. Although we have that, and that is coming from every side, we have a little bit of time pressure, and we need capital, and we need private capital, because the governments, with all the restrictions they have limited capital, but we have a huge quantity of private capital, correctly invested, taking risk into account, but looking at the returns, they can profit tremendously from that trend. And that is what my real opinion is, and that is something where I think we can make a difference, and it's really attractive to invest into sustainability, because it's picking up. Ole has been showing that chart that showed how much the capital amount raised towards impact investments, and I think this is continuing, because imagine what it really means to contribute to sustainability, and I will again reflect on Sapea. As a human being, you have three choices in your life where you can make a difference with regard to sustainability. A, it's about when you're standing in front of a store and a store shelf and you have to make a decision, which product do I take? I think that is a hard decision you have to take, because once you're standing in front of that shelf, you ask yourself, do I pay €2 for the old traditional solution or €2.50? Yeah, for the better impact-driven sustainable solution. I think that is a product mistake. The product that is sustainable has to at least be the same price or even cheaper. And then the decision of the customer is clear. If he knows about it and knows that the function of the product is the same and the price is less or the same at least, then you can easily make a decision. That is the first thing. Second thing is what I share. People take an active decision where they work. And still you see that really talents are lacking in those traditional industries that do not take really sustainable as a key, and they are driven by politics anyway. And the third decision you're taking is as investor. I think we all here in the room can make a difference where we decide where we take our money. And I think these are three areas where we personally decide where we put sustainability. And I think capital, workforce, and the decision at the store means that we can have impact on what we are doing. And I think that's the best situation. And therefore, because I know that it is coming more to the hearts of the people, much more people are affected by climate change, by global warming, by whatever, they say, yes, I want to contribute to sustainability. And therefore, the megatrend is really picking up, and the pace is tremendous. And I think even bigger investors are discovering it. Even though we have a discussion around the world, that was what Anahita was saying, that a little bit of, you have different voices. Some are more loud, some are not, some are contributing, some are not. I think, look at what sustainability is really about. It is growing, and it's delivering returns as it has the right business model. And then you can profit as a venture capital investor. Yeah, and that is a perfect situation. So if you ask myself, yes, I would invest.
And I think that leaves us with a great sense of agency, because there's so much doom and gloom with everything you read in the news. And I think just knowing that we do have agency and that we can put capital towards solutions is actually a positive outlook, which we tend to forget when we are in these type of conversations. But I'm not going to round off yet. I thought I would welcome any questions or reflections from the audience.
Wow.
Maybe I should go back to the audience and ask a question. Great. I think this has been super inspiring conversation, and I think the whole day has been very inspiring. I think what really has stuck with me listening to you is sometimes when we think of venture, we think of these risky early stage investments, but both of you really showcase that it's about doing better with what we have and improving processes or using resources that we already have better, and that by looking at existing systems, we are actually entering into investments with a lower risk profile. It's not necessarily a higher risk. And one of the things that I like the most about what both of you do is this sense of circularity, because I think we're in the position we're in now, all the challenges we're facing, because we're using nature as this infinite source, but it's not, it's finite. And both of you have found really neat solutions to working better with nature and the resources that we have at hand. So very inspiring, and thank you for sharing this conversation with me today.
Thank you very much.
Great. Thank you.